Hello, Dan. How are you?
Good morning, Trevor. How are you doing?
I'm good. I'm good.
Okay, let me just make you the presenter. Okay, done.
Okay.
You should be able to share your screen. Okay, we're looking at Euro USD.
Fantastic.
Is that right?
Yes, it is. Yeah.
Okay, good. Okay, I think we've got about a minute left, Trevor. I think we can
Yeah. Okay. Let's
give
just
give
relax.
people a chance to log in. Okay. Okay. Okay, Trevor, I make it 9 o'clock. I think we can get cracking if you're ready.
I am ready.
Okay, hello everyone, and welcome to another technical analysis with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes time. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel, and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours' time. So if you'd like to watch it again, you can do so there, and we'd love it if you'd also subscribe to our channel and click the bell to get notified. Today's handouts can be downloaded from the handouts tab of the GoToWebinar control panel. If you're having any problems locating or downloading them, please let me know, and I'll send you a link and you can download them from there. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar, and the second is a CFD guide, which details all the different products that we offer at FXChoice. If you are watching this on YouTube, these handouts will be available in the description box. For those of you who don't know Trevor, I'm sure you all do though by now, but he has over 40 years experience as a technical analyst and trader and was former global head of technical analysis at Bloomberg. Trevor, so over to you.
Okay. Well, welcome everybody, and thank you for joining us for this session. Lots to talk about today. Lots going on. Kind of dominant themes: weak dollar, cryptocurrency world, strong gold, and steady stock markets. But as Dan said, if you've got any questions or anything you'd like me to look at, please send Dan a message and he'll pass that message on to me, and hopefully we'll be able to cover it. Okay, let's start with the currencies. Let's start with the dollar firstly, and I want to start with the relative rotation graph, which has been so helpful to us in keeping us in the right securities and seeing where the dollar is versus how strong the dollar is itself. But so what we've got here is everything except the yen on the right hand side of the vertical 100% here. So that's outperforming the US dollar, which is in the crosshair here, and anything that's above the 100 on the horizontal axis, which is the pound, is with positive relative momentum, so is relatively strong. And then furthest to the right is the strongest on a relative basis. Now you might remember going back a couple of weeks ago, we had things moving around on the right hand side here, meaning that they were stronger than the dollar. It was better to be in anything except for the yen, was better than being in the dollar. But we had a fantastic move of the Canadian dollar. I'll just show you this going backwards. If we do that, look at this movement here. You see the Canadian dollar here. I'm just going back and show you what happened. You see here, all the others were on the right hand side. Here's the Canadian dollar here. This is going back back to April, the end of April. And then look at the journey of the Canadian dollar. All the other things rotated around here, still on the right hand side, so still outperforming, but on a relative basis, losing momentum in this relative performance. But the Canadian dollar uniquely was moving west to east. So look at that. You see Canadian dollar? Look at it, shooting across like that. Now it's hooked around a bit now, but it's still furthest to the right here. So there's an outstanding message in this, which is the Canadian dollar is the thing to be in, versus the US dollar, or if you want to, against the Japanese yen. Anything else, they're pretty good. Pound best of the lot, the euro now bunched in here, Scandi currencies in here. and the Australian dollar. Surprisingly, the Australian dollar, pointing sort of southwest in direction compared to the Canadian dollar right over here. So, normally they move in a highly correlated way to each other because they're both commodity currencies, and usually the fortunes of commodities affect them together. But here we've got a separation of them and a strong message for the Canadian dollar. So let's get to the chart itself now. We'll start with the euro, the big one. The picture here is very good, actually. Let me just show you we've got these higher lows pattern. When we did have the sell-off in March, it stopped at an obvious place. This consolidation here, big cigar here to stop the fall. It only briefly went down to 117 and then bounced from it. And now we're testing the high here at 123.50, and we're approaching that. But also I want to just remind you of the big picture here. It's always, as a technical analyst, even though it's not a horizon in which we operate, but let's just see how this run up looks in the context of the big picture. So I'm going to put 10-year chart on here. So that was what we were looking at, but look here, 123, very important level here, and we're just below this big area from beginning of 2018 there. Now, if we take that out, well, I think we've got a very easy passage up through this area here, back up to 138. So this market is attacking successfully so far. Big overhead resistance levels, which is currently taking out and approaching, ones where there'll be very little friction above it once it clears those levels. But we're not, there's plenty to stop us going up before then. It'll definitely be a zigzagging journey, but it's looking good. We've got now support in the shorter term from this consolidation here. I'll take the high of the consolidation, that's 120. So 120, the round number, is short-term support. Short-term resistance is this high here, as I pointed out before, that it is at 123.50 here. But it looks good. The pattern is constructive. The indicators, the MACD is positive. The RSI is pointing up. We do look as though we're going to work higher. This is largely on the back of the weak dollar, but bang for your buck. This is not the best game in town. Let's go to the pound, which is a bit better than, by that I say further to the right on the RRG chart, and look at this chart here. It's powering ahead here. Incredible. We're going back to how far back are we going? What levels are we going back to? We're going back to the levels of pre the Brexit vote levels. Amazing. You wouldn't have expected it, would you? So here it is here. So we're tackling this high here, which you'll see on the daily chart in a moment. That's the 140 level, very important round number there. And that's now support. We've cleared it. The high is 142.35 here, and then we've got these two tops in here. A double top pattern at 143.50 in there. We're tackling those, and then looking like we're going to push higher. But look at this run here, really good higher lows pattern in here. So it's a strong chart, a better chart looking chart than euro. I'm not saying I'd like the pound more, but I like the pound chart more. We've got a nice uptrend line as well establishing. We're beginning to get in these currencies versus the dollar uptrend lines and channels forming. Actually, I can probably, by next time, I'll draw in that channel there, and we're moving up nicely. It looks as though it's going to go further. The RSI is steady. It's in the top half here. The MACD is positive as well. It looks good. So look for the support levels to hold, or any dips, taking the RSI down below 50 and the market turning up again with a white candle to be a buy opportunity. 140 would be great if you could get it there, but I think this market is moving higher. Let's look at our friend the Canadian dollar, which we like so much, and we have liked so much for so many weeks because of the very constructive chart on the RRG. But look at this. What is so threatening about this chart? I'm going to bring in more data here. I'm going to bring in 20 years of data, because look at this what this looks like here. We've broken this important low here. There is another low here from 2015 low. That's what we're tackling now. 2015 low for the US dollar versus the Canadian dollar. So high for the Canadian dollar, obviously. And that, just to give you the number there, it's 119.42 is the level. Then I think we could slip really fast down to 1.1 area because there's nothing much to hold it there. This is a very, very threatening chart here. So this is the one. RRG picked it up, made it clear to us. This is the one to go for. Any rallies are sell opportunities, I think, in it. So how is it looking? Well, it's in the shorter term now, the daily chart, it's kind of flattened out and stabilizing a little bit. The RSI hasn't come up below 50 even, it's still in the bearish area here. It's not particularly bullish. You know, if this is the best sort of rally we're going to have, it really shows you how bearish this market is. So look at the minor resistance levels. I think the 122 is quite an important one. Then 123.50 area here, big resistance in here. I'm doubtful that we'll be getting back up there, but any RSI reading of above 50 and turning down, or a big black candle after that, would be I think a good opportunity to add another short if you haven't got any, or get in if you've taken profits on the short positions that you've had for the CAD. All right, everybody okay there? I'll move on from the currencies now, if that's okay.
Yeah, Trevor, can I just butt in for a
Yes.
second? I just wanted to say, if anybody does have a question, please don't be shy and don't be afraid to ask a question in the questions tab of the GoToWebinar control panel. Okay, sorry, Trevor, continue, please.
Don't be shy. I'm very friendly. Okay, then now moving on to the cryptocurrencies. Wow, what a week. I see that Bitcoin's the VIX reading on the volatility index reading for Bitcoin's reached 130. I don't think the US stock market has ever been at 130. Even in the crisis of 2007, it got to, I think, 110. So this is, I mean, just you know, sort of, I'll call it a developed market. It's an unprecedented stage. Again, didn't Bitcoin help us here? Here it is versus the dollar. This is going back to the end of May. Again, here we had this the strength versus the US dollar. Don't forget the dollar is weak itself. So this is you know, outperforming the dollar doesn't mean it's particularly strong. It's just stronger than a weak thing. But look at the direction there. Here's Bitcoin, Litecoin, Ethereum. Look how they went initially. Ethereum leading the way, Bitcoin never looking good, you know, pegged to a weak index. The dollar itself just stuck there at the apex point there, never looked good. Ethereum looking better, then both of those, all of them turning round here and then down. Each of these chevrons here, this is Friday, Thursday, Wednesday, Tuesday, going back in time. So it's told you, you know, this is you'd be better off in the dollar, which is the worst thing around compared to all other currencies. So that's a message we've had for quite a while in this. You know, if you're an investor, be out of the cryptos. If you're a trader, then be short of the cryptos. So going now, looking at them, here's Bitcoin itself. Let's get the weekly chart because we've come back so far now. We need to look at that. This was a head and shoulders pattern, shoulder, head, shoulder here. We've crashed through the minimum price objective of it. So I've taken off the neckline from it. We come back to the first resistance, a support level, which is 30,000. We got this consolidation here. I had originally drawn a triangle pattern in here and we broke out of that triangle, if you can remember that far back, and burst forward, and it ended up being a sort of halfway move on the way up. Now we've come back again because we have come back halfway, 50%, a good Fibonacci number. White candle being formed here on the weekly, but that's Monday's action, and stabilizing at a good place to stabilize. The weekly RSI has gone below 35 and turned up. The MACD, of course, which is somewhat lagging, is behind us. So how does this look on the daily chart? Well, it doesn't look that bullish yet. We're still coming down here. We've got one white candle today. We've got a bit of a bullish divergence here, short-term bullish divergence in the RSI here. So the new lows in the RSI not being confirmed. Sorry, new lows in the price not being confirmed in the RSI. So the downtrend is strengthening. The trend is down. We've got some divergence, so it's losing a bit of power. It's got support at 50% and the round number of 30,000. If it's going to stop, this is a good place for it to stop. Okay, so I can say that. But we've got to clear. It'll be very, very disappointing if it breaks through 30,000, and we're very close to it. We're only at 36,000, and that would any sort of, it might be the low. Potentially, I'm maybe probing a little bit of buying here to test the water, and everybody's thinking as long as 30,000 holds, and if it gives it, then people say, oh no, here we go again, another leg lower, and right back down to 61.8 or even below. So tentatively, we could be putting in a low here. But remember the order of things in the crypto chart. Bitcoin further down here. The Litecoin next, so this is furthest to the left then, and so the better is the best of the worst is Ethereum. So let's go to Litecoin next. So the Litecoin chart down, we've got an up bar here. Let's look at the weekly. How far back did we get? Well, this one destroyed the Fibonacci retracement here. We crashed through 31.8. There was quite good support. I had mentioned around 200. Well, it just sliced through that support. It didn't show anything at all. 120 is support from here and here. But really the strongest support was above it. That means it's now resistance above it. This is going to struggle. This one here, it's really, it really doesn't look good at all. The daily chart, downward trend here. If you're trading this from the short side, you know, looking for any move above 50% and turning down again on the RSI as another level. And we've got plenty of resistance above 210, a lot of resistance very close to us if we go up here. So just a sick looking chart. Ethereum, moving down, white candle here, crossing up through 35 from below here, so short-term buy signal in the context of a very strong downtrend in the market. Again, the weekly, 1,800 is a good support level. We've got this triangle, which is the support that seems to have held it from now. 61.8 on the nose, actually, that it hit on its low, and it's powered up from there. The 50% level hasn't been broken to the upside yet. It probably is going to be broken to the upside. So those bulls who see this as a big correction in a long-term uptrend will be encouraged to think this is it. It's very important now, of course, we've established this reference low, 1731 here. We must hold that. But this one looks to me as a chart the best one of the lot, as an opportunity of the lot if you are still bullish of it. Personally, I don't like the look of it at all, any of them, and I'm out of everything except for a little bit of Ripple, which I accidentally kept. But basically, you know, the dollar is weak and these are weaker. So there's a lot of better things to be in. And this is a very dangerous thing to be involved in at the moment. Perhaps you like danger, that's fine. I prefer safety. Okay, so nothing on the cryptos?
Trevor, no, we do have a question though.
Yes.
To go back and take a look at yen versus USD.
Okay. Yes. Now the Japanese yen, of course, remember the position of the Japanese yen. It's the only major currency underperforming the dollar, the US dollar itself. Here's the weekly chart of that. Really, it's more consolidating, isn't it? I'm drawing this triangle in here. So this is dollar strength in here, now consolidating. The RSI has come back to 50. and the this is a weekly chart, of course, and the MACD has gone flat. So it's consolidating. It's really getting this outperformance by consolidating. So we've got rather flat behavior here, ranging behavior here. The RSI is in the middle, around it's 43. The MACD is flat. It's very neutral. The ADX is at 17, telling us there's no trend in the market. It's a trading affair. Sell at the upper Bollinger Band and take your profits at the moving average. Sell at the upper band, take a profit at the moving average. Even the Bollinger Bands themselves are narrowing. So we've got range resistance at 109.78, support at here at 108.32. More important support here at 107.46, 107.60, and big important resistance up here at 110.96. This is flat against the dollar, and but you could use it as your other leg. So let's say you're long the Canadian dollar versus the US dollar, or Canadian dollar, Japanese yen, or long the British pound, Japanese yen. And it's holding that position with pegging itself to the US dollar there. And this is, of course, bullish for the stock market. All right, then I'll move to gold. Gold's exciting.
Actually, Trevor, can I just jump in there? Sorry, Trevor, we have had an extra couple of questions.
Sure.
One question is from Salman. He asks, do you expect the weak dollar to last until the end of this year?
Don't know.
Don't know. No idea.
So I can tell you the dollar is weak, and it looks like it's getting weaker, and it's getting more and more dangerous. But you know, when you think about it, how would I know where it's going to be at the end of the year?
Yeah,
I don't know in terms of time. I only know levels. If the dollar starts to steady up and breaks through resistance levels, then in the DXY, you know, then I'll turn bullish. But at the moment, it's bearish and looks. The sell-off is intensifying, therefore it's likely to go further. But I can't see as far as the end of the year. You know, we're not even halfway through the year. So, you know, I don't mean to be rude, but it's really a question and nobody should ever try and answer. You know, people do, of course they do, you know, and they answer it confidently and precisely. But actually, you've got no chance of doing anything other than guessing. But the thing is, I can tell what's happening now is that it's going down, it's intensifying, and it's vulnerable to much further and lower prices. That I can say. But as to how that relates to the end of the year, I don't know.
And whilst we're on the subject of the dollar, we've also had a request to take a look at the New Zealand dollar versus USD.
Okay. Yes. Okay. Good one. Remember where that was in the RRG. So we weren't. I'll just refresh it for you there. So here they're in here. They're close to the 100 level. So they're slightly outperforming the US dollar, but don't forget the dollar itself is weak. So these things are weak actually overall themselves, but not as weak as the US dollar. They're flat. And that's what we see in the absolute chart of it. So the New Zealand dollar, let's go to the weekly chart of it. And you see this kind of toppy formation here. Some people say potential head and shoulders, shoulder, head, shoulder in here. And you'd have this sort of very sharply downward sloping neckline here, but we're way above it. So it's very premature to announce it's a head and shoulders. The RSI is at 50. The MACD is crossing downwards, but that I don't think is because it's bearish. I think it's because it's coming back towards zero because we're pretty flat in the behavior. It's not a bearish signal. We're flat in here. We're ranging. You can see the range is 0.7125 up to the series of tops here at 7.73, let's say, call it that round number in there. It's ranging and it's flat. Unattractive chart for capital gains. You know, that's how it is. It's pegged to the dollar. So, you know, it's very close to the crosshair there. So it's, you know, if you're doing it versus the dollar, then it's not really moving. You want movement, yen for underperformance, Canadian dollar, British pound for overperformance. That's the advantage of the RRG chart. Makes it absolutely clear. This is flat. It's pegged to the dollar, and the dollar itself is weak. Okay, Dan, shall I move to gold now?
Please do, please do.
Yeah. Okay. Just before I start with gold, I want to show you a chart we've been monitoring. You know, we always keep an eye on because it's a very significant message here. Gold versus the US stock market, US 500 here. And this is a very long-term chart, as you can see, moving up here in 2010 to 2011, 2007 to 2011. This is outperformance of gold. This is the golden period for gold, where you were better off in gold than in the US stock market. But then from 2012, you're better off in US stocks than in gold. Gold was really not doing its job, or various threats and inflation and worries and things like that, and gold never went up. Then it had a little bit of a run up here from mid 2018 into the end of 2000. But to me, it broke this downtrend line here and was threatening to resume this long downtrend here. And we flirted with making a new low at 1.2 here as a ratio, don't forget, with this low here. And it looked very much like, but it looks as though it's bouncing here now. So gold is having a good run, as you know, and that's and the US stock market is also still going up, but gold has been better, and that's gold being better lately. So it's bouncing at a very predictable level. This was a level where the ratio was crucial. Either gold was going to collapse or gold was going to steady against the US stock market, and it did steady. So let's go back to look at gold itself. And I always like to start with the weekly chart here. And so gold's had a great run up from this double bottom low here that we saw there, broke the apex of it, far exceeded its target, and it pushed through resistance that we'd said here, and last week it cleared it. Now it's heading for the next resistance at 1900, 1950, big round number of $2,000. Won't it feel nice if it's above $2,000? But we chartists are thrilled to bits that this double bottom occurred at this consolidation here from the second quarter of 2020 there. So it was a very natural place for it to hold. The weekly RSI is looking strong as can be. The MACD is very positive here. So here's the daily chart now. Nice uptrend going on here. Nice series of white candles, higher lows in place here. Bollinger Bands expanding as the volatility is increasing, and that's what kind of thing you want to see as you're moving up. The ADX is at 43, the trend, which is up, is strengthening. The MACD is positive. The RSI is at a very high reading of 82 here, but that doesn't mean it has to come down. It is hard to maintain a big reading like that, but it's not giving way. It's high because it's strong. And we got a high, higher high, and higher high. High, higher high, and higher high. It's intensifying on the upside. If it intensifies on the upside, then it's probably going to go further. I do not know where it's going to be on December the 31st, but I think before that we will go higher because that's how it's going up and it's strengthening. Silver, actually let me show you the gold silver ratio. Okay, there's a similar ratio chart as before, but instead of being versus the S&P, this is versus gold versus silver. So rising is gold outperforming silver. Here, falling, drifting is gold underperforming silver, and silver being better. And that has been was the case most of last year. Now it's flattened out. Here you just as well off being in silver or in gold. And so I would go for which is the better of the absolute charts of the two. So let's look at the absolute chart of silver, and I think silver has a better absolute chart. I think what we've got here is a big ascending triangle. So we've got this pattern of higher lows in here. We've got horizontal tops here. We aren't at the top yet, but we're threatening the top. This could be explosive on the upside if we break through these highs at 29.80-ish level here. So we're coming up towards it. We're still below it. I'm saying something which hasn't happened yet, but potentially it's explosive on the upside if we can break out of that triangle. But we're moving up quite purposefully through the triangle, the ascending triangle. Here is the last leg of it. Here, low, higher, low, higher, low, higher, low. All looking good here. No divergence in the RSI yet, so still power in the RSI. And so the important level to hold for this run is to maintain the pattern of higher lows is 2670 level here, and as long as that holds, we're in this uptrend line that started in April, and we should keep pushing. And I don't think there's much resistance on this candle here. It was very brief, that spike up there, and so I don't think we'll have much trouble taking out that 2875 area there and pushing up towards that horizontal line. But this one is a very exciting chart. Both gold and silver have gone up a lot, together. We know that they're correlating with each other. We see that from the ratio chart. But I think as far as explosive moves to the upside, I think there's more potential percentage on the silver than the gold. But both of them look bullish, and they're both good. Brent crude oil. This is a frustrating chart here. This is the $70 reading here. We have got the higher lows pattern in here pushing up towards it, but it's frustrating that we've just spent all this year really flirting with the $70 high, and every time it comes back, it does come back to a higher low. So the inference is that it's likely to break eventually to the upside, but it's taking a long time and it's finding it hard to do it. And the technicals don't look that brilliant at this moment there, so I don't think it's any time soon. So here we've got flat ranging behavior here, 65 up to 69.95, $70. $70 is the big stubborn level for it, and this consolidation going on here. So it's a tricky one. Could fail, could break. If it breaks $70, it'd be, I would expect, a very powerful and fast move through that. And I think it's more likely to break up than down, but it's finding it hard to actually do it. Okay, I'm going to move to the stock indices now, if that's okay, Dan.
Yeah, sure. There's no questions for that one. Thank you.
All right, going to the US 500 here, and we flattened out here. It's still looking okay, but it's not making any ground particularly. In the context of this big move up, it's hardly anything, and we have got shadows below, which is bullish. So it's rejecting every time it goes down. It doesn't like being down. So this feels much more like correcting the excess. Again, you've got ahead of itself here, rather parabolic, correcting, pausing, and prior to moving on further ahead, I think. So it's just a pause in that. Here is that pause. No upward rising lows pattern has been challenged or broken. It just looks like it's waiting for a bit. Pivotal has been the tech index itself. So let me show you that one. You see here now you've got a very different pattern. Remember, the S&P was just going up with that very small last couple of bars, hesitation. But here we've got much more threatening pattern. We've got a high and a higher high here. We've got, on this weekly chart, we've got a bearish divergence here. We haven't seen many of those. The last one we saw was this one here. Back here, and we did have a sizable sell-off. That's the context we're talking about. They're now high, higher, high, high, lower, high, and we did have a sell-off and up. There was a small divergence there, but we've got a divergence. So weak threat inside the bull market here. Very important that it holds the last higher low, which is 12,200, still way below us here. But this is a bit of a threatening market. So here is the second high, and then the sell-off here, and holding, finding a little bit of short-term support at 13,000. And that's important to hold in this context here. And then there is resistance at here 13,800 and 14,000, the round number itself there. You know, I would say of the two, I'd rather be in the S&P. I think the threat is from the technology stocks themselves. Some of those stocks, big names and things that were the darlings of the market, made us all and made us loads of money over the last 10 years, are now looking really sick. Going to the FTSE now. The FTSE is now, don't forget we've got a strong, relatively strong sterling, and that's a drag on the FTSE because it has many dollar earners in the FTSE 100. It's an unusual index to have so much commodities and the miners and plantations and foreign dollar earning companies that are listed in the FTSE. So it's, you know, the strong sterling hurts the constituents of the FTSE. And in a way, you're much better off, if you want to say how Britain's doing, looking at the 350. But it's still looking good, despite all that I've just said there. Here's the weekly chart, low, higher, low, higher, low, still making new highs here. But I must warn you, there's massive resistance ahead, 7,200 up to 7,600. There is a big wall of resistance. I think it's going to find it very hard to go up through that. It is pushing towards it, but I would expect hard resistance to set in close to where we are now. And it is really not that exciting on the upside, this market here. It's not like the S&P. It's also not as bad as the tech. It's just gone a little bit flat. The German 30 is also a very, you know, that could have been the same picture, couldn't it? It's a little bit flat now, and that's because it's just pausing after this shooting out, making the new high there. And this one I like the look of a lot. Certainly of the European indices, it's the one I prefer, and way over the FTSE. These lower shadows here are very bullish message that we're getting here in the weekly chart. Every time it goes down, it's rejected. You know, the market wants to buy it. The MACD is also positive here. So going back to the daily chart, this I think is going to resolve itself to the upside eventually, and so watch out for a break of the 15,500 high and pushing on, and this could be the leader, turn to become the leader. Okay, so the picture we've got here is pretty unchanged as far as our view of the world is concerned. There's a lot of rather sick-looking tech stocks, charts. You know, let me just do the weeklies of these there. Look at this is Apple, high, higher high, lower high. You know, people are drawing in this neckline here now, and we're under threat. This is potentially a horrible chart. High, higher high, lower high, neckline. Countdown from the neckline would be okay, 85. So gird yourself for that if we take out this low, this uptrend line here. Apple, Amazon. Okay, that's looking pretty flat there, and we haven't got higher lows in here. This is a consolidation. This could be bullish, could be bearish, but if the market itself is, the tech stocks are pulled down, then it will come down with everything else. Facebook is the best looking of them. Here it's looking really good. The weekly chart looks phenomenal, and it really, that one is almost separate, I would say. Google is also not, sorry, is another separate one here. This chart is looking great on its own, and this would be the one, if you want to stay in the tech area, that would be a one to hold. Netflix looking very threatening. Another consolidation in here, threatening the bottom part of it, could easily be pulled down. Look at Zoom. Okay, that's the end of the pandemic, isn't it? That's already on its way down. Uber, they're very toppy, broken down. Tesla, down 30% from its top, below the 600. You know, probably headed to 500 in the short term. But in contrast, if we look at, now go through the banks, Bank of America, Wow, isn't that lovely? That's where you should be, in the banks. You should be in also cars. Look at Ford here, about to make a new high. Old technology. Don't make electric cars. Um, Tesla does. It's down 33% from its high. Ford is zooming up. Um, and but market, we've always liked that one. JP Morgan, we've always liked JP Morgan there. Don't like Demon, but we like JP Morgan, and up it goes there. And there's a very clear message, isn't there, in that? And then even the banks outside the US here, Paribas here broke this high. We pointed that out to you, and that's pushing on from there. That looks really, really good. Deutsche Bank, can you believe it? It's a bankrupt bank, but the stock price is going up, soaring up here. It's terrific there. Santander, look at that. That's great. Although beware, we're heading into a sizable wall of resistance. It looks a bit like the FTSE, doesn't it? Nice looking chart. We're heading into a wall of resistance. That's no longer on my favorite list. Barclays, HSBC is the one I like. Barclays here is flirting with this 2020 high here. Potentially this could burst forward or fail. Here looks more like bursting forward with the whole sector. And then here, this was a great call into this low here and out of it, and pushing up here now. And I think this is could go. This has got a wall of resistance, but it's up at 600. So between 400 and 600, long way to go. Relatively easy passage, frictionless passage in there. Okay, my friends.
Okay.
Any more questions, Dan?
No, that was it. Thanks, Trevor. Thank you very much for this week. Well, thank you very much, everyone, for attending. Please join us again, same time, same place next week. And don't forget that we'll be posting this webinar to our YouTube channel in a few hours or so time. So if you came later and you want to watch from the beginning, you can do so over there. And we'd love it if you'd also subscribe to our channel and click on the bell to get notified. Trevor, do you have anything else to add at the end there?
No, I haven't. I wish you a great week, and it was quite an eventful week last week, particularly in the cryptocurrencies. That was a brutal event then. I know, because what we do know is the average price of people that purchased recently. Great thing about all the cryptocurrencies, we've got enormous amount of data that we don't have in other markets, and this means that in that sell-off from where we are now, 70% of the holdings were losers. Were nursing losses in the market, and those that are not that are the big holders, with very large holdings who bought a lot lower down. But most people, the majority of people who are in that market, took a big bashing, and maybe won't return, to it at all. So we'll see how it goes. It might be before BC and after BC, and the Bitcoin crash is BC, as a sort of marker in the history of this market. But thanks very much, everybody. Thanks, Dan, for looking after us again so well, and have a good week, and may the trend be with you.
Cheers, Trevor. Bye, everyone.
Okay. Bye, Dan. Bye-bye.
Bye-bye. Bye-bye.